Okay, we start today's market talk. What we saw last week was I may die but will kill you for sure. This happened with Ultratech when they announced their entry as part of strategy to become a comprehensive building solution provider. It led to serious derating in multiples of the incumbents. Now the ROCE of Polycab is 31%, while for cement for Ultratech it is 15%. So capital allocation wise, Ultratech move is prudent. It is a sensible move because they're going to get higher return on capital. But actual returns will be dictated by execution. There are very limited entry barriers in wires, but in cables, scaling up the business will take longer as product approvals have a typical tenure of 2 to 3 years. So in best case scenario, what analysts are talking about is that it will grab a market share of around 5% in by FY30. But the present incumbent sold off. For Ultratech, recent investments in Kesoram and India Cement will also impact their cash flows in near term. And that is the reason why, because of the concern on cash flows, and taking on higher debt, Ultratech also sold off. Switch off your volumes, please. IMF has, okay. Next, key factors behind the market decline. Markets were priced for strong growth. Now, what has happened is IMF has said India's GDP is going to grow at 6.5% for FY25 and FY26. And now market has started pricing the risks from tariffs, competition due to lower import tariffs to Indian businesses like autos, etc. Fall in FDI as global trade getting separated into two separate high-tech and energy blocks. Weather and monsoon unpredictability, AI-driven job cuts in software, etc. So now what is happening is all these risks are getting priced in and markets are correcting because they were priced to perfection. What happens is a fall in market leads to wealth effect also operating in reverse. Like if you're making money in the stock market, you are very happy. So you spend money, you buy stuff because you're assured, you buy houses, etc. Moment the stock market starts correcting, you stop spending. So this is basically called wealth effect. Now this will impact the growth in real economy. So business will also start playing safe, leading to fewer new projects and more cancellations. Now 6.5% GDP growth is simply not good enough for India's drive to become a developed economy by 2047. And this is the reason why there is a sell-off, because stronger growth was expected, but strong growth post-pandemic was because of huge government spending. As now fiscal deficit is pruned, 6.5% would be the new normal rate of growth, which people are seeing is not good enough. And that is why they are lowering their earning estimates. Change in sentiment around public investment and high valuations. Recent corrections in power, defense, railway stocks have come as investors are reassessing valuations following a multi-year rally driven by capital expenditure growth. In defense, investors are now focusing more on execution and profitability than order books. Order books are there, but will they be able to execute is the key issue, and the time it will take. Now, the other issues are trade war fears. Now, there are 25% duties on imports from Canada and Mexico would come into effect from 4th March in the US. That is on Tuesday. Goods from China will be subjected to additional 10% duty. Now, how China responds to latest round of tariffs remain to be seen. Market is not discounting. I repeat, it is not discounting full-blown trade war between US and China. And that was the reason why it sold off on Friday. Nothing else. It was just discounting a trade war between US and China. Uncertainty has increased, which has led to CBOE volatility, which is the US index going to 21.13. Now, Asian markets were predictably weak. Hong Kong, which was doing very well, sold off on Friday. Japanese stocks were hit by stronger yen, rising inflation, and uncertainty over Trump tariffs. Now, to add to that, Nvidia's results, though they were very good, but didn't lift the sentiment as the forecast for gross margin was lower. and there are fears about US economy. And because of that, people are now talking about recession in the US economy as reflected in the bond yields, which I'll show you. So IT index stumbled 4% on Friday only, as data showed that US weekly jobless claims rose more than expected. So if the jobless claims are rising, it shows that there is a weakness in the economy, adding to worries that US economy may be slowing and inflation expectations rising due to Trump tariffs. Now, in addition, this is Bitcoin chart. So if you see here, Bitcoin had dropped below $80,000, losing more than 25% since high which it made on 20th of Jan. So it went above 108,000 and it's fallen below 80,000 also. So this was achieved on US President's inauguration day, that high. Now, reason is looming tariffs is leading to safe haven shifting of money. And so instead of earlier, the Bitcoin was touted as an alternative to fiat currencies instability. Now, crypto has also become like any high risk assets, and it tends to get sold out. Now, coming to US, so if you see here, this is the US 10-year yield. It has fallen below the 50% retracement. So it has come down to 4.2. So why it is happening, I explained it last time also, that now the money is moving out from equities to safer assets like US bonds. So if there is more demand and less supply, the price will always fall. Second reason is now, since the economy is weak, people are pricing in 2/3 rate cuts in 2025. So it is getting priced in, so the yields are coming down. Now, lower yields are always good because for all over the world, because others can also lower interest rates. But this has to be watched. Now, the dollar index rose last week, though it was coming down, but it rose last week because the moment he announced tariffs, the dollar index started going up. But it is vulnerable right now. And this is another issue which has to be followed. Now, USD INR based on RBI intervention had come down to 86.5. But last week, it again went back to 87.44. Just over a week only, it depreciated around a rupee, etc. So which was one of another reason for equities to sell off. Now, Brent crude is now below the declining trend line, so that is positive. Right now, the markets are pricing in more oil, etc., from Russia, etc. Now, gold, as I had brought out, it had reached its peak, and it is now getting corrected. It corrected roughly to $2,856 to an ounce, and it is below this rising trend line now. So let's see whether it can go to this level of 27 or so. If it goes there, then it becomes a buying opportunity. This is what I was referring to, that I'm looking for that level of 2750 to get into gold again, because this correction, this rise was very steep, and it was not correct to buy at these levels. So better to buy at lower levels. Why the gold is doing well? Because all the central banks, China, India, etc., are buying gold. So the gold, there is a lot of demand now as a safe haven buying. Copper is also correcting now. It was going up because of possibility of tariffs, but now it is correcting because of various demand, supply dynamics, etc. So nothing great here. Nasdaq corrected 3.38% because of poor Nvidia results and other issues. So people are now not pricing in that kind of growth in AI related stocks. Though Dow was positive, this was because the US Jan core personal consumption expenditure price index came in line with consensus estimates. So the US markets ended positive on Friday. So that is why the Dow was rising. Now coming to India VIX is so low, as it has been brought out. It has come down to 13 odd level. It rose a bit on Friday, but these are not reasonable levels for it. It has been falling steadily. So I don't know why it is falling so much, because of so much of uncertainty. Nifty weekly chart, if you see here, It's very interesting. This is, if you see the weekly chart, it has now come down to 100 EMA, which is very negative because it has not come to these levels for a long time now. So it is now held at these levels. Temporarily, it may take support at 22,000 level and show a bounce, but then it is expected to come down. The reason, and if you see here, 2024, it had made a high at these levels only, 22,124, and it has come down to that level. So this whole rally of uh, 2024, full 1 year rally has been negated now. So people are now looking at lower targets, but there is no point giving a target in a falling market. Now, on the daily charts, if you see, this was a declining trend line. That has been broken on Friday. So it went below. But if you see here, I had pointed out this last week also, it is making that classic Elliott wave A, B, C, D, E pattern, right? So it can go to 21,800, 21,600, anywhere. And then again, there may be a bounce, and then there would be it may bounce at 22,000 only, go up to this declining trend line, and then again start correcting. So right now, but if you see on the daily charts, it is oversold. So that is the thing which is pointing to a possibility of a bounce from here. So that bounce should be used to exit position, not to take fresh positions. Now, if you see the hourly chart, it is grossly oversold. RSI is at 16. So point is that despite being oversold, there was no bounce even on 28th. And if you see here, what is happening? You see, it falls to a level. It fell to this 22,800 odd levels. It remained here for some time, then fell with a gap. Then it remained at these levels for 3 days at 22,500 odd levels. Then it fell. And now let's see whether it stabilizes here or falls again. So if it stabilizes, it can go down, go up. We never know. But the point is, it is grossly oversold. So these kind of readings are not sustainable. So there is expected to be a bounce. Now, Nifty Bank, slightly stronger. On the weekly chart, the candle was though weak, and it is still some distance away from 100 EMA, but there's not much support here. On the daily chart, it is now testing that 48 level where last time it had bounced from. So we'll have to see this thing now. But if you see technically, it is below the 200 EMA, but though it is still not on daily chart, not oversold. So it is among the stronger indices as compared to others. The reason is HDFC Bank. It bounced very nicely from the 200 EMA. So it bounced from the 1680 levels, went up to 1730. So I am looking that if it goes up another 10-20 rupees on Monday, then I'll short this. Because you need some upside to short something. There is no point shorting what is dead already. So this is a nice, so if the RSI goes above 60 and it goes another 10-20 rupees, it's a nice shorting opportunity. Reliance has come down to the 1200 level support. This is where it has been taking support. It closed at 1200. So now this is a critical level. If it bounces from here, then it's okay. And this 20 EMA will provide resistance. 1230 would be a resistance right now. First, it has to cross this, but this is looking again very vulnerable. Midcaps, I've been correcting, and now I had given this target of 10,500 on Midcap Select Index. So this is likely to be achieved. It fell around 3.82%. Nice index to trade because on a flat day or when there is no movement on the Nifty, the broader markets always sell off. So if the broader markets are selling off, the moment you see it in the morning that the broader market is sell off, you can easily short this. Small cap index has broken this low which it made on the election day, 5th June, etc. Now it's looking vulnerable. It has fallen more than 20% and now it is officially in the bear market. Now I'll cover certain indices or some sectors. First is Nifty IT. It is looking the weakest right now. And generally in periods of uncertainty in India, the IT index used to be a safe haven. This is corrected big time. And the reason is concerns over slowing global economic growth and disappointment over Nvidia earnings, which have failed to sustain the AI-driven rally. But the major reason why it is falling is because people are expecting lower economic growth in the US, and this is the direct relation to the growth or the quality of whatever is happening in the US economy. So it is looking weak. It is oversold also. So there would be some bounce, but that should be used to exit and not to buy fresh, because this is looking weak and may hit this 32,000 or 31,000 levels, because there is no support after this. So this has broken the key supports it had. So now it will stop here only. So this is looking weak. Now the other sector which is looking weak is auto. Now it has come down to that support. Basically, it is correcting because the projections were weak for February retail sales, etc. And the other reason was that though autos companies had sold, but they are sold at discount in December. And though subsequently there have been some price hikes, but we'll have to see in their P&L and their numbers. Now the numbers have come, except Mahindra and Mahindra rest and Escorts. Rest of the numbers are weak. Now this is also oversold. So one has to see this also. Now the next is pharma. Pharma is again correcting because they're expecting 25% tariffs on generic drugs from India to be put by Trump. Now it has come to again that support of around 19,800 odd. So we'll have to see from here. FMCG, in their markets, FMCG used to be the supports, but this is the contra this time. And in this is a uniqueness of this market, that this is the weakest sector. And this is basically because people are not expecting any bounce, etc. So from 66,000 odd levels, it has come down to 50,000. That means 16,000. That is roughly 25 to 30% fall from the top. So this is the weakest, and there is no strength here. And it can fall further because the valuations are very high. Last is metals. So if you see, metals is not oversold as compared to others. It is showing some strength, but this depends on dollar index. If the dollar index correct, then this will go up. But in case people are expecting trade wars and dollar strength and tariffs, etc., so this also correct. So this is right now in that zone of uncertainty. You can't be sure. But first, it has to cross this 8,300 odd level, which is the 20 EMA for metal index to go up. So that is the issue. So I have finished. We'll take questions now.